If you want to be very good at financial modeling, it is not enough for you to just be good with spreadsheets or finance and accounting. You need to have good problem solving skills. And that is why I'm going to show you how to solve a problem using my reverse flowcharting technique. This technique is my proprietary technique. However, I should say that this is largely inspired by the Ishikawa diagram, and there are many firms who have adapted this in different ways. To illustrate this technique, let's take an example of revenue modeling for an airline. Let me be a little bit more specific, modeling the ticket revenue for airline. Now, how do we know where to start? What are the key drivers for this model? What are going to be the independent variables? How do we decide that? To figure this out, what we're going to do is that we're going to work in the reverse way. That's why I call it as the reverse flow charting. So we will start from our ending point, which is the ticket revenue. What we're going to do is we're going to think about what are the two data points we want with which I can immediately calculate the revenue. Keep in mind two data points, and this should be sufficient enough to calculate the revenue. What would be the two data points? And for now, I would say stick to the two. There are exceptions to that rule, but we'll talk about that later. So we may think of tickets and prices. What are the number of tickets sold and price per ticket? But at this juncture, it becomes important for us to go and understand how the airline industry works. Because my first concern is that in airline industry, different routes will have different ticket fares. So how can we generalize it by taking number of tickets and price per ticket? That may not be a good idea. This is where doing some internet research could help us. Or you could look at annual report of an airline firm and look at what are the key performance indicators, or in other words, KPI that they talk about. And we look at those KPIs, we would realize that in airline industry, one of the KPIs that is being discussed is not the number of tickets, but it's the number of passenger kilometers. So it's going to be the number of passenger kilometers into price per passenger kilometer. Number of passenger kilometer times price per passenger kilometer. Now, what is passenger kilometer? I'll explain that shortly. So very simply put, if you have 300 passengers traveling 200 kilometers, then that works out to 60,000 passenger kilometers. That's all. So these metrics are very common in the transportation industry, whether it is for human transportation or whether it is for cargo transportation. In cargo, we have ton kilometers or something on those lines. So this is a very important metric for us. So now if you look at it, we started with one problem, which was to get the ticket revenue. Now instead I have two problems now. I have to find out the passenger kilometers and I have to find out price per passenger kilometer. So again, the question comes, how do we get number of passenger kilometers? If I'm looking for revenue in 2021, then I need these two data points for 2021. One way to think of it is to use a simple year-over-year growth. Let's look at what is the passenger kilometer they traveled in 2020 into 1 plus a growth rate. But that would not be appropriate. We have to think about what are the key constraints. What limits this company's ability to carry more passengers? So here's a quick chart to show you the constraints. So your constraints can come from your ability to sell. That is how well you compete in the market compared to your competitors. Or it could be about the demand in the market. It could depend on external conditions. It could also depend on your capacity to supply. If too many passengers come, would you be able to fly all of them? There can be a capacity constraint. And sometimes you may also have limits imposed by regulators or anyone else who has control over the company. So let's think about it. What is the constraint for an airline? Let's think of a British Airways or a Indigo Airways, any company. What are the constraints for them? Can they take as many travelers as they want? Again, a little bit of, if you're not sure of the industry, a little bit of research would help us. Keep in mind, in the industry, we talk about industry analysts, we call them as industry research analysts, not just as analysts. So a lot of research work will be required, trying to understand how an industry works. So when we do a research, what I found out was that as far as number of passenger kilometers is concerned, or as far as airline industry is concerned, capacity is the key constraint. Because if you have to serve passengers, you need to have that many number of flights. So we need to define it as capacity. And capacity again has to be in passenger kilometer terms, right? So one factor is the capacity in passenger kilometer terms. So some of the companies refer this as available seat kilometers. So I'll keep it generic here. Capacity, which should be in passenger kilometer terms. So if that is one of the data point, see, your key constraint always has to be one of the data point. So if capacity is a constraint, what is the other data point that we need with which I can arrive at expected number of passenger kilometer for 2021? 2021 is in future and I don't know what that is going to be. One of the factors that is going to come here, so from capacity, if I have to arrive at passenger kilometer, I need occupancy rate. I have capacity to carry 300 passengers, but how many seats were occupied? That's what we call as occupancy rate. So I now need to forecast two data points, or I need to figure out a way to get two data points. One is capacity, another one is occupancy rate. So we started with ticket revenue. That problem got broken into two pieces. Now each of these problems are going to get broken into two pieces. Let's finish this part. Let's finish the left hand side node one by one. How do we get capacity in passenger kilometer terms in 2021? If you have n number of seats and if you travel y number of kilometers, so n times y is the capacity you're going to have. So this is going to have number of seats that we have. How much seats they're going to have in 2021, on an average, how much distance will a flight travel? Average distance a flight travels a year. So how do we get this? Now when you look at number of seats, one way to get that is, let's look at how many seats are there with the airlines today. Again, let's think of two data points. What are the two data points we need for number of seats? If I know the number of seats in 2020, then I can just take the seats in 2020, which is the year ending number of seats at the end of financial year 2020, plus I can take into consideration the delta. That will tell me how many seats are there going to be there in 2021. Delta, basically I'm talking about increase or decrease in seats. So delta in seats, that's what we need in 2021. Now how many new seats are going to come into picture? How do I know? So delta would essentially depend on how many flights they add or how many flights they probably surrender, because a lot of flights are taken on lease. Some of the lease terms may expire and you may not want to renew it, especially if you think the market condition is going to be bad, right? So for that, we need to figure out how many flights they're going to surrender and typically how many seats they have. But here is where we may have to make exception to our rule of breaking a problem into exactly two parts. Why? Because as far as number of flights are concerned, an airline may have different types of flights with different configurations and different seat setups. So as far as the delta is concerned, I'll have to probably break it by different flight configurations. So maybe a company wants to add a few flights, maybe a few very large international flights, or maybe there could be a smaller flights that they like to add. So you'll have to find out flights by configuration. I don't want to take any brand names here, but you might be knowing already about different types of flights. So let's take that into consideration. Let's say flight type 1 and flight type 2. Or I should say seats from flight type 1, flight type 2 and so on. They may have more than two flight types, so you will have to segment them. So in situations where you have no way of breaking a problem into two parts because there are multiple segments involved and each segments behave differently, you may have to break it into multiple segments. So here our rule of exactly two will not hold good. So we have flight types here. For each flight type, how do I know what will be the change in seats? So I'm going to figure out how many flights do they plan to add or surrender. Number of flights to be added or surrendered times typical number of seats in those flights. Right? What is the typical number of seats that you have there per flight? So when we do it for all of them, we would eventually get the increase in seats. That's what I'm referring as delta here. I should probably just use the symbol delta. So number of seats in 2020 plus whatever they plan to add in 21, that will give us the number of seats in 2021. In fact, we would look at average number of seats, not the ending number of seats. Average number of seats will simply be average of opening balance and the closing balance. But in any case, we need to get these two data points. How do I get number of flights to be added? So sometimes these are information that you can get from the company's management, or sometimes you only have to take a guesswork. So as we keep breaking this problem, there is a point at which we have to stop. What is the point at which we have to stop? Two situations will stop. Either I already have the data, this data has been given to me. So average number of seats per flight. If you know the flight configuration, you can easily figure out how many flights are there or how many seats are there in those flights. So you will have the data, but how many flights to be added or how many flights will be surrendered, You may get this data from the management commentaries. Otherwise, well, you only have to take a guesswork. In modeling parlance, we call it as assumptions. So wherever you come to a point where you either have the data or you know that there is no way to get the data and only way to get the data is to take a guesswork, we stop at that point. So through this way, we can easily figure out number of seats. We haven't done because we have only finished the left leg of it. Now let's look at average distance traveled in a year. Now what is the constraint as far as average distance is concerned? Again, we may have to do certain research and figure out what are the constraints. Now one thing could be that it's all depends on management's efficiency, how well they handle their flights and logistics. In that case, we can take average distance traveled as previous year into 1 plus growth rate. But at the end of the day, capacity is also a constraint, right? You cannot, a flight, let's say on an average travels 50 hours a week, then and in an hour if it travels 800 kilometers, now 50 times 800 or 40,000 kilometers is all it can travel, right? No matter how much efficiency you bring in. So how do we tackle this problem? So what we are going to do is, we are going to figure out what are the constraints. And if you think there are multiple constraints, there could also be a DGCA limit, a DGCA or any other aviation regulator might put a limit saying that this is how much a distance a particular flight can travel. Again, these are things that we have to do a thorough research on to be able to figure out what's happening. So once we figure that out, what can we do? Let's try to break it. If there are multiple constraints, let us for a moment, I mean, I have to do enough research on this. I haven't done much. But for a moment, let's say there is a DGCA limit, which I don't know. I have to do a research on this. But let's for a moment assume that you are allowed to fly an aircraft at max for 50 hours a week. So what we're going to do is, we're going to break it into two parts. One is the limit imposed and what we are capable of. That's one data and our capability in terms of how much distance can we fly the flight. So the total distance travel is essentially going to be minimum of the two. So now how do I find out the limit imposed? Let us say if you've been told that the limit is in terms of number of hours. Again, as I said, I have to do research on this. I am not right now fully confident of what kind of limit exists. But let's say if it's in terms of number of hours. So what we can do is number of hours that you're allowed to fly per week, or I'll just put as number of hours into average speed. So if you're allowed to travel 50 hours a week, and if you're going to travel on an average at 700 kilometers per hour, so 50 times 700 is the total distance we would travel. So number of hours, if it's on an annual basis, that's going to be number of hours per week into maybe 52 weeks. What is the limit that is imposed to you on a weekly basis? Number of hours per week times number of weeks per annum, which is going to be 52 essentially. And average speed per hour, how do we figure out what is the average speed? Either this data is known to us or maybe I can take a guesswork. From some of the times I have traveled in flight, I know typically flights travel at around 800 kilometers an hour, at least in the domestic circuit. I don't remember the speed in the international circuit. So I'm just going to stop here. So this gives us what is the limit imposed. Now in terms of capability, how do we figure out how much distance we can fly? One of the things we can do is how much distance we flew last year, because if it's about our capability, we can improve our capability. So this can be based on distance flew last year into 1 plus growth rate. Distance traveled in time t minus 1, so that's going to be 2020 into 1 plus growth rate. So that's the other data point we want. How do I know what growth rate to take? Distance traveled in 2020, well, it should be available in the records. How do I know what growth rate to take? One of the things we can do is either assume this is independent, in which case we can take it as the basic guess would be the average of the past growth rates. Look at the growth rates of the past and take average of it. Or you may want to take into consideration any additional factors. But right now I'll stop here. So essentially now we know that in order to get the capacity, what are the data we need? We need how many seats they had in 2020, how many flights they plan to add for each different configuration, and what is the typical number of seats for each of the configuration. When I have this, I'll figure out how many number of seats they will have. And it's easy to take the average number of seats in 2020 plus number of seats in 21 divided by 2. That's going to be the average. How do I figure out average distance travel? Because average seats into average distance will give us our capacity in terms of passenger kilometer. How do I get the average distance? That's simply in case if there is a DGCA limit. Again, I don't know. I'm just assuming that something must be existing from a regulatory perspective. So the distance you could travel is going to be minimum of either whatever limit is being imposed on you, and based on your efficiency, what is your capability in terms of how much distance you could travel. So through this route, we can figure out the average distance, And when we multiply the two, we'll get capacity. Now comes occupancy rate. So I am assuming you would have already got the drift of the technique. So the technique is you work backwards and you get the idea. But in any case, because I started with this, I'll end it. Now, but let's look at occupancy rate for 2021. How do we get occupancy rate? Now, again, the question is, what does occupancy rate depend on? Right? Occupancy rate, does it depend on your ability to attract audience, or is it something completely random? See, any data point here is essentially going to fall under three categories. They are either going to be independent. Independent meaning in the past they would have been random, and in that case we are going to take it as average. Average of the past, that would be our best guess. The other way to break the data is that data could be time series dependent. Time series dependent in the sense it depends on its own past. So here we took distance traveled as previous year into 1 plus growth rate. So our data could be time series dependent, or our data could have causation relationship with something else, which means our data is driven by some other data. Now we have to ask this question: what does the occupancy rate depend on? Is it going to be random? Can I simply say it's going to be random, it's going to depend on the past? Or can I say it depends on its own past data, occupancy rate gradually improves over a period of time or gradually decreases? Or does it depend on some other data point altogether? Maybe the number of flights that are there in the industry or the country's GDP growth rate. Does it depend on any of these? You have to ask yourself this question. Sometimes there are possibilities that many factors may look like they drive it. So for example, occupancy rate definitely is driven by GDP growth rates, right? No doubt. Economic growth rate is a key driver. But is there a way you can clearly establish a relationship between economic growth versus occupancy rate? If you can, well, you can try it out. Maybe try out a regression analysis to try this. But if you don't have it, then well, we can't use it in our model. If you know that GDP growth rate drives the occupancy rate, but you can't be very sure, I then cannot capture it in my model. In that case, what do? We look for the next best relationship. So what I may want to do is, for occupancy rate for 2021, I may say occupancy rate for 2021 is that there might be a gradual change upwards or downwards from 2020. So I'll take it as a time series dependent variable. So I'm going to say that's going to be occupancy rate for 2020. This data should be available to us from the records plus a change in occupancy rate, a delta in occupancy rate. That's something we can figure out. Now, most of the time, what is going to happen is, as an analyst, you may have to take a guesswork, especially if you know that, okay, there are multiple factors like GDP growth rate, competition, maybe the COVID crisis, right? There are multiple factors that are there, which is going to affect our occupancy rate. Then what we're going to do is, we can factor that in here. We can say, there are multiple factors. So what we're going to do is, we're going to take our judgmental call, right? What do we think will happen? Maybe occupancy rate is likely to fall this year. Is it likely to go up? Take your call. And then we are going to use a guesstimate. So with that, we would get our occupancy rate. Finally, we need to get price per passenger kilometer. How do we get this? Again, it boils down to these three questions. Is it independent? In which case I can take it as the average of the past. Or is it time series dependent? In which case we're going to say it depends on our own past values, or is it causation relationship? Or again, constraining factor could also be some authoritative limits. So in Indian context, for example, we have been clearly told, at least for the foreseeable future, as of July 2020 that I am in right now, that airlines have been imposed a limit on minimum and maximum. So they cannot charge below a particular level, they cannot charge above a particular level. So what is it going to be? So I would say, even though there is a limit that's being imposed, it's fairly wide. So what I'm going to do when it comes to averages, let's think of what drives it. I don't think it's an independent factor because price is driven by certain factors. Now what drives it? One factor could be maybe crude oil prices. Crude oil price drives my ticket prices, or competition drives it. So if it's competition, it's going to be depend on large macroeconomic trends in terms of supply and demand, market forces. If market forces are going to fix it, it's going to be depend on large macroeconomic factors. If it's crude oil price, then I'm going to take it as a function of crude oil. How do we figure this out? Here is where we have to talk about statistical relationships and structural relationships. What are statistical relationships? In a statistical relationship, we explore relationship between two data points by looking at the past. Structural relationship is where we try to look at the relationship between two data points based on logic. Now, if you're not sure of a structural relationship, I don't know, logically I'm not sure what drives it. Maybe crude oil price drives it, or maybe competition drives it, or overall market forces drive it. I'm not sure. Then what do? then what we are going to do is we are going to study the past and see in the past if crude oil if you can find a strong relationship between crude oil price and price per passenger kilometer. If you can find it, that's fantastic. Then we'll use that relationship. But if we cannot, then we'll have to use some other relationship. We'll have to explore it. Now, it is also possible that two factors drive it. Crude oil price puts a lower limit and competition puts an upper limit. In that case, as we did here earlier for the average distance traveled, here again I can take it as a function of two things. Minimum of price based on crude oil driven price, crude oil price plus margin, or market driven price. As far as market driven price is concerned, what we can do, how do we define this price? One of the way I would do is I'll take it as price in previous year into 1 plus growth rate. And here we can take into consideration all the market factors in terms of demand and supply, what's happening, and maybe take a guesstimate call as far as growth rate is concerned. If it's driven on crude price, then what we can do, maybe do a statistical analysis. You can probably run a regression analysis and find out what is the relationship between crude oil price and passenger price. So this is going to be a function of crude oil. So I can take it as a regression model where it's going to be A plus BX, where A is going to be some intercept into B into crude oil price. But I should tell you that as far as corporate finance is concerned, often we find it very difficult to come up with regression models. Main reason being your revenue reporting changes. For example, with IFRS 15 coming in, what gets reported in the top line is now very different from what was getting reported in top line 2-3 years back. We have moved from invoice price concept to fair value of consideration. So which means my revenue calculations would all be very different in 2020 versus 2015 or so. So I'm not going to have adequate data to run this regression analysis. So this most of the time we don't see it as an option at all. We can keep breaking this analysis furthermore, but for now I'll stop here. I'm assuming that this should have given you a nice idea in terms of how you can also break your problems into pieces and analyze them. So next time when you're building financial models, I would sincerely request, do not just copy somebody else's template and repopulate the data. Think through the problem and figure out how to exactly model it. All right. Thank you.